Can you guys do a mic check for me? We've got, just so you know, Laura, we've got Sal, Brad, and myself.
Good morning.
Hello, good morning.
So just so you guys know, I've talked to Laura now a few times, and she is very high energy. So you guys are going to have to either match her energy or get the fuck out of the room.
I am very high energy.
Yeah.
Yes.
Yeah.
I almost have to tone myself down.
No, that's good. No, kill it. Let it rip. Just let it rip.
Yeah, actually, I'm kind of glad you said that because I never know. Like, I know when I'm, like, in front of an audience, I can kind of feel, like, what, the energy coming back at me, but sometime over the phone, it's hard to gauge that.
Yeah, I'll just keep you mindful. We talked about this before because obviously call-in's a little bit tougher. Just if you feel someone jumping in, just let it happen. And if you want to jump in, just let it happen because we need more back and forth. Because like I said, Matt kind of just talked.
I got it.
Yeah.
No worries.
All right, awesome. You'll hear music start, and then that's when we'll be starting. So,
can I get mic checks on you guys?
Mic check.
Okay.
Balls. Good one, Brad. Way to be on your best behavior for Laura.
Here we go.
It's like a weird hum in my headphones.
Mm-hmm.
All right. Three. Oh, it doesn't matter. Music's gone.
You're listening to Inside Real Estate, your source for all things mortgage and real estate related. The show that brings you all the hottest topics and insights directly from those who know it most. Now sit back and enjoy the show.
Yeah. What's up, everyone?
So soothing.
Yeah, Paul Pasalakis. We are Inside Real Estate. We've got Salvatore Cusmano in the studio. How are you?
I'm pretty good.
We got Mr. Brad Weisgerber. How you doing?
Good. It's Halloween.
It is Halloween. It is Halloween. Yeah. Are you dressed up as? What are you dressed up as?
Your son.
You kind of could. Yeah. He's portly.
You're
like you.
old.
He's portly. We have a very special guest today. President of American Financial Resources, or AFR for short, Laura Brandeo. How are you, ma'am?
I am wonderful. How are you? Good morning and happy Halloween, everyone.
Thank you. So Laura is the president of a really good company who does do wholesale lending to a lot of brokers like ourselves. And Laura, why don't you give your background? I know you're the president of the company, but and you want to talk to us about a few things, but give us some of your background, how you ended up in that position, so on and so forth.
Absolutely. Well, first of all, I just want to say thank you so much for having me on the show today. I truly appreciate the opportunity to speak to everyone. And yes, my story kind of goes back. I've been in the business for quite a while, but the story of kind of how AFR came about is back in 2007 when all of us were going through that terrible time in the industry. As we speak of Halloween and spooky times, that was a very scary time for all of us.
Yeah.
And during that time, we were all sitting there every morning watching Mortgage Implode on the website and pretty much saying, well, will our company be on that list today or not? And as I was sitting there kind of watching what was going on, I actually reached out to my IndyMac rep at that time.
Wow.
And I said to her, strange, right? And
Yeah.
I said to her, you know what? Is there any place that you know of that might be kind of a safe haven, somewhere that maybe isn't going to have this difficulty with kind of having the legacy of the subprime market? And she said to me, you know what? I actually have a client in northern New Jersey that had this idea of starting a wholesale division. So I'm like, I think I can possibly help with that. So I actually went up and I met with the CEO of the company, and he's like, Laura, here's the plan. I'm a small retail company. They had maybe 25 employees, okay?
Wow.
They had just become, they were just a little guy, and they had just become a correspondent lender. They had their warehouse lines and all of that. And he said, you know what? With all of this turmoil that's happening within the industry, we're clean. They were brokering all of their subprime loans at that time. So they didn't have any legacy. They didn't have any issues, with bad loans that were going to have buybacks and all of that. So he had the foresight of actually saying, maybe this is a time to start a wholesale division. So he brought me on, and I was literally employee number one of the wholesale division. Wow. Yeah. And he said, there's a desk, go start wholesale. So at that time, I kind of
that is wild. That'd be like if we decided, like, hey, we're gonna do wholesale. That is kind of a crazy story. Oh, keep going, Laura. Sorry to cut you off.
Yeah. So it was kind of weird. So I literally sat down at the desk and I used my friend Google and I started just looking up mortgage brokers at that time. And I literally just called different mortgage brokers and I said, guess what? I'm not going to have any of that legacy. I'm brand new, and I'm here for you. And I had one product, FHA, down to a 500 FICO score. That was it.
Yeah.
That's all I had to offer them.
Yeah.
Well, the good news is as other companies went out of business, lots of really good team members wanted to jump ship to somewhere, again, that was safe. So I was able to pick up some really great talent that's actually still with me all these years later. So we started growing, and then something else happened. Taylor, Bean, and Whitaker went out of business.
Yes, they did.
And you remember that?
Oh, yes, they did.
Taylor, Bean, and Whitaker goes out of business, and I literally, back in the day when you had paper files, I literally had boxes and boxes and boxes of files coming at me because nobody else wanted manufactured homes.
Yeah.
So that was kind of how we started, and I was employee number one. About 2 years later, I became a partner of AFR, so I actually bought into the company a couple years after that.
Smart.
And then from there, we just continued to grow and evolve and all that. I became COO, and I was actually Chief Operations Officer for quite a while. And then recently, in the last couple of months, they actually gave me the position of being president of the company because, through all those 11 years of weathering all the different markets and all the changes within our industry, whether it was compliance, whether it was, rates, what programs, whatever the different changes are, we've kind of always been able to maneuver and shift and grow and survive, and all of that and flourish in this market, which has been great.
Yeah,
so that's kind of the story.
It's really if people don't remember, there was something called the implodometer that just had all these different mortgage companies that were like imploding, and it was like back then the broker was like 50%, the market share, as opposed to after it they like almost disappeared because the regulations came down so hard on the broker business because we were the scapegoat at that time, right? And not a lot of people were going into the wholesale business, and kind of like we talked to Matt Ishbia on the show. Same thing. It was like he bet on the broker very early when a lot of people weren't, and you guys did kind of the same thing. You decided to go.
We did.
Bet on the broker really early on, and create a situation where you helped revitalize that whole section of the business. So kudos to you guys for doing that. And obviously, companies like us rely on companies like you to be good partners of ours. So what I want to get into is obviously, as a business model, what AFR does. And I know, AFR by design, it seems like, has been a really good lender as far as filling the gaps where a lot of other places aren't doing. For instance, you guys spearheaded the VA renovation home loan, USDA renovation home loans. You talked about manufactured homes, which is like almost 10% of the market, which is a neglected, a very difficult type of property to do historically. You guys said, okay, we're going to figure out a way to do that. And it seems, and we talked offline, you and myself, Laura. It was like you guys made a decision very early on to be a different type of tool in the loan officer's tool belt in the broker community.
That is correct. Absolutely. And that has always been our strategy. Even from years ago, we kind of separated ourselves where we said, we're not going to be the commodity. There's lots of excellent lenders out there that can help with that, but that has never been our model. We've kind of said we want a strong relationship with our clientele, and we want to be there to be that trusted advisor and educator and person to be able to provide the tools to our broker community that will allow them to build stronger relationships on their side. So if they're going into a realtor's office and that realtor says, you know what, I've got these dog properties here that just won't move. You know, they need repair. They're sitting there, and I just can't get them off the market. You know, being able to walk in there with the option of being able to offer a renovation program for every single type of loan, whether you're a top end and you're going to do a conventional, whether you're a veteran, like you said, and you're able to use your benefit to be able to do a renovation loan there, or you can do a 203K, FHA, or like you said, most people do not even realize you can actually include renovation costs into a USDA loan. Most people don't even realize that. So being able to go in to your referral partners and be that trusted advisor and educate the marketplace, that's powerful. And that has always been the position that we have taken. Now, you mentioned the VA renovation. That all came about because one of my sales members reached out to a client, and the client said to him, I think there's a way to do a renovation loan on a VA. And he came back to me and he says, Laura, is there a way? I said, honestly, I'm not sure. I said, I'm going to have our VP of underwriting reach out to the RLC. So they reach out. They said, nope, there's no such thing. She comes back to me. I said, try another one. Try another regional office. She calls the second one. There's no such thing. I said, I'm sorry, got to keep going until somebody understands this program. She took her 4 calls in 4 different areas of the country until finally somebody answered the phone and said, you know what? You actually can do that, but we really have no guidance in our guidelines for you. So
that's wild.
She comes back to me. Isn't that amazing?
Yeah.
So she comes to me, and I said, set up a call. We need to speak to this individual because he knows there's a program. Bottom line, we literally said to him, if we write the guidelines, will you take them, review them, and sign off on it? Long story short, that happened.
Wow, so you guys actually created a product.
To do that.
Wow, you guys created a product in the marketplace that didn't exist basically, and you guys just pushed through. I like that. I like the fact that you guys were like, you know what, we can do this. Let's make some calls.
Yeah, I mean the mindset of why not, right? It exists.
Exactly.
There's no guidance. Why not put it together and figure it out? Obviously, you want to write a good loan, and there's thousands upon thousands of pages of guidelines from other programs to borrow from. Why not, right?
Yeah, it was really just there wasn't enough clarity, so people were very afraid of it. It was very vague. It was kind of like 2 sentences within the guidelines, and everybody wasn't willing to take the risk of, well, what if we do something that doesn't fit, or maybe somebody's interpretation may be different. So we said, well, let's put clarity to it. Let's really define what the rules are, and let's fit within those guidelines. And honestly, within the first month of rolling out that program, one of my clients, one of our brokers out in California, I believe, sent me a newspaper article. And that newspaper article was a story about a 60-year-old veteran that had never owned a home before in his life. And he was able to purchase a home using his benefit and have the home modified for his disability.
That's wild.
That's wild. Isn't that awesome, right?
You know what's even more wild, Laura, is the fact that a lot of veterans, and to be fair, they don't even know that they have the opportunity to do a VA mortgage. A lot of it's education. These veterans don't have any idea.
If they do, they don't understand how awesome that loan is.
It's the best loan in the market.
It's the best loan out there. It is so great.
There is no better loan in the market other than a VA loan, especially on the purchase side. 100% financing, no PMI, low interest rates. It's a great product. And if you're a veteran out there, just heed these words. Like, you have an opportunity to buy a house.
And if you're a loan officer, ask the question: Are you a veteran?
Because
most veterans they don't say it. They don't even try to use their benefit because they don't understand it. They don't understand that they're going to get a better loan. They just try to go conventional.
I've done it.
But you will asking the question, "Are you a veteran?" You're gonna thank them for their service. 2, help them and give them something in return by giving them the best loan in the market, hands down.
I can't tell you how many times I've blanked on that and found out after the fact that they're a veteran. And Sal, you've probably done it too. And you're like, oh shit, I can't believe I didn't ask him that.
Right.
Yeah.
Right.
They're-
So,
Yeah.
Laura, let me ask you this. So, I mean, these loans that we're talking about, I think part of the education is to the consumer, to the real estate agent, but also, I mean, even us as professionals, and I've been in the business for 16 years. I don't even think I understand these programs from like a deep standpoint or understand how to do them. I think part of what you as a company also have a challenge on is educating the brokers and the loan officers in this market on how to do these loans.
Right. So I actually want to go even further back than that. It's just the concept, right? So you talk about how when you started, there was a subprime. Everyone was crashing and everyone was staying away from subprime. But you said I came out, I had one product, 500 FICO score FHA.
FICO.
So a lot of people don't understand, what's the difference between a subprime loan and niche products, kind of like what you have, where they're maybe non-QM or not necessarily subprime, but more nichey that a lot of people don't get into, that a lot of people think would be subprime. What's the difference there?
Right, and it's funny because back then, wasn't there a little bit of a blurring of the lines?
Yeah.
Right? I mean,
yeah.
you remember that, and if you've been in the business 16 years, you guys went through that.
There was no line.
So I remember, it was, FHA is the new subprime, right? Isn't that kind of what we heard, back at that time? And you're right. The only difference was, I guess, at that time in the beginning, and I'm talking, 2007, at that time, it was, at least they're verifying their income. At least you didn't have stated income on there, or you didn't have no ratio
No
or
Ninas,
and that type of thing, right?
Yeah.
So at that time, that's the way it was. And I think over time, of course, it substantially evolved. I mean, I think the logic within the AUS has certainly been perfected. I think now it definitely does kind of layer and stack the risk levels, so it's taking into account not just the FICO score, it's taking into account other factors. Of course, it's taking into account, are they getting a gift? What is the DTI? Have they owned a home previously? Can you verify the rental? So I think as all of this time has passed, I think you don't have the blurring of the lines. I really do think, no, it's not subprime. So even if somebody maybe, had some difficulty or credit challenges within their life, and maybe they might be a little bit of a lower FICO. Of course, I don't do down to 500 now, but, maybe somebody that does have a little bit of a lower score, maybe a 580. Let's use 580 now as kind of that crossroad. That doesn't necessarily mean that that's a subprime borrower or someone that shouldn't get into that home or be able to refinance, because I really do think that the AUS system is very smart now and only getting smarter. It's very interesting to kind of see the models and the risk factors that go into that really does guide us into a direction, as to making really good quality loans.
I think that the blurred lines are more just the interpretation of the loan officer or the broker as to what is a subprime / garbage loan, right? Like for a lot of brokers, I think they say, I don't do any of that. They think it's garbage, but really it's like, okay, these loans have to go through DU and underwriting and everything like that. So it's a closable loan. It just has the caveat of being able to build in costs and whatnot. I think people shy away from that just because they think it's a mess, but it's really not that bad if you know what you're doing.
Yeah, so I think there's a big
That's
misconception that subprime back in the day was literally it's paper files, stated income, how much you make, 100,000. Okay, I'm not going to verify it. I'm not going to verify how much money you have. I'm just going to give you money. That was a subprime loan back in the day. That's what caused the crash. This today, this niche markets with the lower credit scores, it's not subprime.
They're vetted out.
It's almost like trying to put a human factor into it. Like you got a low FICO score, okay, but I don't know what happened to you. I don't know what your story is. Maybe you're having a bad year or whatever, right? But it takes all the layers into consideration. So maybe you have a low FICO score, but you have all the money in the bank. You're not borrowing funds. Like you have everything else going your way. You just had a bad month that destroyed your credit, and you're building it back up. So like it's almost trying to put a human factor into it with a complicated algorithm to make sense.
It gives people options that have blemishes or had problems, and it's not all that, right? Sometimes they've got decent credit and they just want to take advantage of a different product.
Right.
But with all that being said, yes, it gives the the consumer another option. And because of the way that we vet them out today, I don't believe that we're going to have like rampant like foreclosure rates on these loans. Wouldn't you agree, Laura?
I agree.
Yeah.
I totally agree. I really think there have been so much progress, and we really aren't looking at things the way we did in the past. I think we definitely have learned, from the past, and I think we've all put kind of stopgaps in place to make sure that things like that don't happen.
And let me ask you this.
Yeah, I do think we're in a good place.
Let me ask you this, Laura. So what do you say to? So I'll be very candid. Sometimes when I see some of these loans, like a renovation loan or a 203K or some of these other loans, I look at it and it's like, you know what? That's going to be a nightmare to process. That's going to be a nightmare. And truth be told, I've shied away from doing those types of deals because they're not always a success story on that level. I guess my question to you is, what are you guys doing as a company to make that process smoother? Give the loan officer the tools and the information to properly set those deals up. And are they a nightmare, or have you guys kind of figured out how to make them a smoother transaction across the board?
Well, thank you for that question. And your perception or your interpretation of that is what I hear all the time.
Right.
So
right.
Believe me, you are not saying anything that I don't hear probably on a daily basis.
Right.
Now, the first thing I'd like to say is we have been doing these since we started wholesale. So 11 years ago, we decided we were going to jump into, renovation. And at that time, it was only 203Ks on the FHA side. But at that time, you don't know what you don't know, right? Just like you guys, when a mortgage broker is saying, I'm going to do this renovation loan, well, I don't know what I don't know, right? So my idea of this is, it's going to be a nightmare dealing with a contractor. The borrower's not going to understand what's going on. There's additional forms that have to happen. So 11 years ago, you're right. I probably would say there's so many moving parts and it's complicated. But over time, you learn, right? You learn and you grow. And I'll give you one prime example. Many years ago, we decided, you know what? It is a nightmare having multiple contractors. So if you have the guy that does the HVAC and the guy that does the sheetrock and the guy that's going to fix the porch and all of that, it's a nightmare wrangling all these people. So for an example of that would be many years ago, we decided we're going to have one GC. So you're going to have one general contractor. Now, he can have as many people under him as subcontractors as he wants, but it is impossible to try to wrangle all of these people.
Right.
So that was something we established very early on. So as time went by, we continued to say, how can we simplify this, to make it easier for everyone? So, of course, we have many, many educational programs. So every single week we do educational webinars where brokers can attend and learn about the programs. Now, what I came out with about 5 years ago now, 2013, I came out with something called on-demand processing. On-demand processing is actually free to all of my brokers. I will process that loan for free for you. Now, the reason why I did that is because just what you said.
It's a big deal.
I don't really know. I don't really know what I'm asking for. I'm not really sure how to explain it to my borrower. Maybe I need an expert that can do that for me. AFR actually will process the loan for you once the loan gets approved. So the upfront part of it of gathering your normal documents, the pay stubs, the W-2s, the sales contract, you're going to do that just like any other loan. And then when a loan gets approved, we will actually step in, deal directly with the borrower if you want, your choice. You don't want us to speak to the borrower? That's fine. We'll go through you, whatever you prefer. We will talk to the contractors. We will work directly with the borrower and the contractor and you to be able to get that loan to the table.
That's just great. It's funny that we're talking. We're actually signed up with AFR. I don't think we do a lot right now, to be fair. But this is actually like even me in my seat that I'm sitting in right now as a broker, and I think any broker that's listening right now needs to kind of like listen to this, because the beauty of being a broker, Brad and Sal, the beauty of us being
You're telling me like I don't know.
Yeah, the beauty of being a broker is we have options like this, right? We have multiple tools in our tool belt. That's why I believe that the broker is the best place to do a deal, is because we have an opportunity to go out in the market and find the best products for our clients, and companies like AFR that are helping us do that is really huge for us. And this is why a Chase or a Bank of America can't compete with the things that we can do. We have so many tools in our tool belt.
And
It's
I like
awesome.
I like how she.
That's awesome.
I like
I'm
how you
excited,
talk about.
Laura.
you don't know what you don't know, and everyone's scared about
Yeah.
what you don't know.
I'm-
But
Yep.
you learn over time. Well, you really kind of help bridge that gap by saying, "Hey, we'll handle it for you until you know what you don't know and learn
Right.
over
That's
time."
right.
Right? That's
That's
great.
right. Well, here's another example. I wanna actually keep that going with the you learn over time. So about 18 months ago, I get a phone call from a contractor. Contractor's very upset because, again, as the lender, you guys are done. The borrower got into their home. But now for the next 3-4 months, we're working with a contractor and borrower to get that project completed. Okay, so now I have a contractor that calls and says, I'm so upset, I need my draw money, and the borrower went on vacation. Now, back in the day, actually, it's not even back in the day. I'm kind of speaking for my company. There's many companies that still do it this way.
Right.
So the way that it works for a contractor to get their draw is it's a 2-signature authentication.
Yeah.
So what happens is I have to send the check to the borrower. The borrower has to sign it. Then the check has to go to the contractor. The contractor has to sign it because it's in both of their names. Okay. So 18 months ago, I get a phone call from a contractor, very upset. He needs his money. The borrower went on vacation. It's sitting in a mailbox. Okay? So I said, why in the world am I mailing checks? In the year 2017 at the time, why am I mailing anybody a check?
It's crazy.
At our company, no more checks.
I like
We don't
that.
mail checks at all. So we built a portal, a renovation portal, that when that borrower closes on their loan, they get a link, and the contractor and the borrower work within a renovation portal. And when that contractor says, hey, Mrs. Smith, I need more money because your cabinets came in and I'm about to put them in your kitchen, she goes into her portal, she reviews everything, and she electronically signs, okay, my contractor can now get a release of funds. At that time, he says, good to go, and the money is automatically ACH wired into his bank account.
Welcome
check.
to the future. That's awesome. Dude, it's funny.
Christmas.
This is one of the issues that we
Again,
have.
it's
Go ahead,
kind of
Sam.
like that VA renovation loan, right? It's like, okay, we can do this.
Why don't
right?
we?
Yes.
Why don't we? Let's figure it out. And it probably wasn't like completely mind-boggling to create a portal that
Nope.
works on, right? I mean, there's just
Well, it's common sense.
e-signatures and payment processing, right?
That's it.
I want to see you
That's
write the
all it
code to
is.
develop a portal.
Well, sure, but I'm saying it's not like, you had to
not
flip the
mind-boggling.
world upside down to make that.
Well,
It's pretty
here's-
awesome.
Here's the beauty of our business and what's happened is back in the day it was very archaic. It was like paper
Yep.
pushing, and the companies have decided to embrace technology in the future and how things are actually being done in the market. Because because of the lack of the competition, because of lack of different things, companies could get away with just sucking. Well, you can't suck anymore, right? You've got to figure out ways to make this more palatable across the board. And kudos to you guys for being on the forefront of that. You decided to take a really complicated process, and from what I'm hearing, is saying, let us put things in place to make this more palatable across the board for the client, for everybody, and even the broker, so that we can actually give more products and take this to market that's an actual product that makes sense for people. It's different.
We talk about technology innovations all the time, and we mainly talk about the bigger lenders, the mainstream lenders that do a lot of A paper, a lot of high FICO, generic stuff, but they do a lot of volume.
The assembly line,
But-
kind of the assembly
Yeah,
line, right?
I think kind of what you guys have been creating is more innovative, right? Because it takes more thought process and more of an urge and more development time to develop something like this, because it's not.
It does.
It's not really.
I mean, it
for
definitely
them.
does, because there's so many. Well, number one, you're adding even more people into the mix, right? Not only am I working with the realtor, the borrower, the broker, and the lender, now I've got contractors in there. I've got subcontractors in there. I've got builders in there. I've got HUD consultants. I've got all these different parties that are now also part of the transaction.
That's wild.
And
That's wild.
I saw an article that you actually developed something for the Amazon Echo as well.
I did.
What's
I
up with
did.
that?
Yes.
Brad's a big fan of the
I've been
Amazon
looking at
Echo.
developing. I've been developing.
Brad is all about Amazon
Dude,
Echo.
he wants
Yeah,
a smart
or Alexa
house.
or
He's got a
whatever.
Roomba that
Yeah.
goes on command. So
I
he
love
is such an Amazon.
I have a
Echo
developer
nerd.
account too. I'm trying to work on writing my own
Yeah.
stuff too.
Okay, Brad.
I was interested.
All right. So talked about. I mean, what is it? I don't know.
I don't know.
Yeah, so we have a skill, okay? So they're called skills, and we have a skill called Ask AFR. So essentially, the way that it works is you can download the skill, and then if you're a client of ours and you have your pipeline, you can literally ask AFR different questions. So based on your AFR Loan Center credentials, you would log in, and then you can ask it questions such as, ask AFR, what locks are expiring this week? And Alexa will literally come back and say, the Smith family loan is expiring on Tuesday, and the Jones family loan is expiring on Monday.
Brad is
and you can literally,
physically excited.
Yeah, you can literally say, ask AFR to have my account executive call me, and it literally will
don't have to type an email.
The account executive to call you.
Brad can't stand up right now. Let's put it that way. He's so excited.
I love it.
You just see the smile on his face. His geek.
Yes.
That's awesome.
I'm just
Okay.
a lazy human. If I could just say,
I know. You are. You're not lazy, by the way. I don't think you're lazy at all. I think you're weird, but not lazy.
Yeah.
So let's move on a little bit. So obviously, a few weeks ago, there was this. So there's this whole thing between broker and retail. Obviously, we're a broker, and we there's different ways you can categorize things. But there's kind of a rift, or like the broker community is finally coming together with this whole AIM thing, and there was this big convention in Las Vegas a few weeks ago where you spoke. Actually, you did a really good job, by the way. So talk to me. You guys were an early adopter of AIM. You guys kind of jumped in that to support the broker community. Tell us about that decision and why you decided to kind of go full in on that.
Yeah, I guess it's about a year ago. I think it was last November. One of my sales team members actually reached out to me and said, hey, Laura, want to bring you into the fold of this new Facebook page called Brawl. And he's like, I'm watching kind of what's happening here, and I just want you to be aware of it. So I'm like, okay, let me check this out. And I went on, and I kind of looked at what the mission was and kind of where this was starting. And I said, you know what? This is all about, being a partner, a true partner of our brokers by not actually going after and trying to refinance, the loans that came in through the wholesale channel and being able to give the leads back and all of that. And I'm like, I do that already. So I want to make sure that I'm kind of in here as somebody that's, yay, yes, that's kind of who I've always been. I've always been very true partner to the broker community, and I want to make sure I'm part of it. So at that time, I reached out to Anthony Casa, and he wound up coming up to our office last January, and we kind of sat down for a few hours, and he was like, wow, I had no idea that you guys were doing all of these different things. And I said to him, I said, listen, I want you to know I'm here for you guys. Like, I am 100% in, and it's not a change. This is who we've always been and something that we always want to be part of. So please, keep me involved as you develop. And so very early on, I was actually one of the Brawl True Partners. I think there was like an original 6 list.
Yeah.
I was on that list. So I was one of the original ones. And then when he started doing these shows, the AIM conferences, the regionals, they were wonderful. I went to that first one in Irvine, California, and honestly, I've been in the business for over 20 years, and I don't think I've ever felt that kind of energy at a show as what I felt in California.
Yeah.
And so,
that was good.
Yeah, and I was like, Anthony, whatever you're doing, just count me in on this, and I want to be at all these shows to really help and promote. And in addition to what we did previously, I've also rolled out a program that now I actually get leads from Zillow. Actually monitors our entire portfolio of all of the loans that we do. And I get notified whenever one of your clients puts their home up for sale. So that's an additional thing that we recently have added, as not only will we notify brokers when a payoff is requested, but we will also notify you if a home goes up for sale, in addition to some of the other things that we've done. So that's kind of, I'm definitely 100% in. I think it's phenomenal. And just going back a little bit even further, even before the Brawl movement came about, I noticed a few months before that, maybe around last August or September, all of a sudden I started getting a lot of calls from people saying, hey, Laura, I owned a broker shop before the crash, And then after the crash, I went and worked for a retail organization, as a correspondent.
A lot of people did that.
And now it's time for me to go back to being a broker. Those calls started increasing. Month over month, I started hearing that same story. And so I would tell Anthony all the time, this is what I'm hearing, just one person out here in the marketplace. I have to imagine that the shift is coming. And I find it so exciting to continue to hear everybody's story of kind of moving back into the broker side.
Yeah.
And that's where, for me to educate and show people these different programs that are out there and be able to be a valued, trusted advisor to their referral partners and own the market. I say it all the time. I'm sorry to go off on a tangent,
okay. Do
but
it.
this is something I'm so passionate
I can
about.
tell. Do it.
So, okay, one of the things I always say, the mortgage business, we all know we have to take our, continuing education and stay up on regulatory. Absolutely, we got that. But I find that in our industry, if we were medical people, right, we were in the medical personnel, we would continually say, I have to know the latest tools and I have to know the best way to be able to use, the latest medical technology. You would have to do that. But I find in our industry, a lot of times we don't stay up on the latest and best programs and best technologies and best way to do our jobs. We kind of get caught in that silo and we do the same thing over and over again. And one of the really best things that I found that AIM has done and this shift in the marketplace, and even what's going on in our industry with the rising rate environment and kind of, the margin compression and all of that, I think it's finally caused everybody to say, I need to get a little outside of what I've always done. And I have to learn new programs, or I have to learn new technology, or I have to be open-minded. So I think that's the biggest thing that I'm watching right now, just as AIM is growing and morphing and evolving.
I think as far as being a broker, right, and knowing what you can do, you don't even really have to sell. You don't have to sell clients on what you do, and it's not like
You're
being
right.
a retail loan officer. If you know what you can do, and if you have these tools like that AFR offers, or let's just say the bread and butter conventional loans, like here, there, you
Yep.
can place them wherever you need, and all you need to do is let people know what you do,
It's a
and
service.
the business will come to
It's
you.
a service
right?
now.
It's
Yeah.
not like you need to
It's service.
go and
Yeah.
It's service.
hunt leads.
Yeah.
Hey, Mr. Realtor, I also do this.
Right.
Right. Okay.
Right.
Leads will come to you.
Right. Real quick, because we're running short of time, Laura, and I want to make sure we get this in. I know, obviously, you are the president of AFR. The reality of our business is there's not many women in your position, and you obviously are doing a fantastic job. You've got a lot of passion. You know your stuff. And I think something that's really important that you've created is, I think, a group within AIM for the women in mortgages. Am I right on that?
Yes. Yes, you're correct. So one of the other things I kind of went to Anthony with a few months ago is I said, as a woman in the mortgage business over the last 20 years, a lot of times we would go to conferences or we would be part of organizations and you would be that one woman sitting in a room. And I've had the fortunate, that I'm very fortunate in my life that I've been able to get a seat at that table. But there's a lot of women that haven't had that opportunity.
Right.
And even there's a lot of women brokers. Like luckily we launched the AIM Women's Affinity Group in Vegas the Friday night before the actual event. And I had close to 100 women show up at that initial event, and a lot of them were owners of their own broker shops, and they all said to me, this is the first time that I felt that I wasn't the only one or I wasn't the minority. We were a strong group together. And they all said, years ago you would go to a conference and you were all by yourself. You looked like maybe you were the processor. You know what I mean? They didn't look at you as you were the owner of the company or that you were the executive of the company. And the time has changed.
Yeah.
We have gotten to the point in our industry that these opportunities are opening. And I saw a lot of, the generation behind me, the millennials sitting before me. And I said, guys, do you understand the opportunity you have put in front of you? So, yes, we finally have gotten to the point in time that it's not just a man's world in our industry. And I think that's fantastic.
I like to think it's in our country, but sometimes with the
I
news,
think you're right.
Yeah.
Sometimes with the news, I get a little depressed about it.
Our industry as a whole has always been.
It's a male-dominated industry for sure. So, Laura, just to wrap this up with you, if you had a message to give the audience, obviously a lot of people, real estate agents, brokers, people from AIM, they all listen to this. What would be your message for them, and also how can they get a hold of you to sign up with AFR? Because I'm blown away by your thought process, your ability to create new products. I'm actually, as a team, I think we also have to take another look at AFR and say, okay, we need to really kind of dig into this because we just thought it was too hard. So I guess what would be your message for the audience, and then how do people get a hold of you to sign up?
Well, thank you very much. And that is the message, is that it's not too hard. That's exactly the message. I go out there and say, you are leaving money on the table. You are leaving relationships, opportunities, referrals on the table if you do not educate yourself and learn how to do these programs. Remember that we have put a system in place that even if you say, there is no way we're going to understand how to process a 203K or a home style or whatever the case may be, we will do it for you at no cost. So don't be afraid of it. We have the education. We have the resources to be there as a trusted partner to educate you so that you don't have to leave that money on the table. And it's not just the money. It's a long-term relationship. A lot of times you need that one thing to build that relationship. And once you have that, you'll get all the regular stuff too. So don't be afraid of it. Now is the time to educate yourself, be prepared for this market, and don't run away. So absolutely, that's my message on that. And as far as how to sign up, I'll give you the easiest email would be sales@afrwholesale.com. If you just utilize that, just request a broker package, and we certainly can get you signed up right away.
That's awesome. Laura, thank you so much for taking the time to do our show. I know obviously you're very busy. We really appreciate your passion. You've been a fantastic guest. Thank you so much.
Thank you very much. Have an awesome day, guys.
Have an awesome day, Laura.
Happy Halloween.
Thanks, Laura.
Take care.
All right. So, yeah, I mean, she was awesome.
Yeah.
I think we're fucking idiots for not like looking at these products a little bit more. Wouldn't you
Yeah.
agree?
No, I mean, it's
It got my wheels turning a lot, right?
we've only done ourselves a disservice
Yeah, I mean, listen,
know,
just so the audience understands,
by
I mean,
assuming
it's too hard for us to do, right?
or not worth our time,
Not worth our time.
which is stupid.
I think a lot of brokers.
That's
out
what
there,
I think. They think like, hey, and even it's like focus on the bread and butter, focus on what you're good at. Everyone's good at normal loans. How do
Yeah.
you differentiate yourself in the market, right?
I mean, it just makes me think of the saying that what got you to where you are today isn't going to get you to where
Yeah.
you're going, right? So you
Yeah.
got to change it up a bit. You got to look at other avenues.
So I really think as a group, even us, and I think anybody that's listening, I mean, having these extra tools in our tool belt to be able to go to market and say, listen, dude, you can do a renovation loan if you're a VA, or you can do a one-time closed construction loan because we've got that now. Or it's like whatever you want now.
I feel like you're like rapping, or you're like bobbing back and forth.
I'm like Jay-Z in the booth. But you know what I'm saying? Like I was really impressed by her. I was really impressed by her passion, and I'm impressed that they're pushing the envelope a little bit.
Yeah, I'm really impressed by the technology and the innovation that they have.
Yeah.
I'll be more impressed if you get a broker package to them by the end of the week.
We already are signed up. We're signed up. We're signed up.
I'm kidding.
We're signed up with them.
Check that out. I didn't even know that.
Yeah, we are signed up with them.
You don't know what you don't know.
Yeah, yeah. So thank you, everyone. So listen, for the audience, please go to our website www.ire.
That's 3 W's.
Yeah, 3 W's irepodcast.com. Go to Podcast Detroit. We're on there. Go to iTunes. Go to Stitcher.
Google Play.
Go to Google Play. Go to Spotify. We are everywhere.
You can ask Alexa to play Inside Real Estate.
It'll play it. Yeah.
Yeah.
Yeah. So, I'm really excited about what we've got going on. We've got a lot of great guests coming on. The new guest list will be coming through. We are almost booked through the end of the year. Isn't that crazy?
It is crazy. We are booked through the year.
We got 2 spots left.
We do?
Yeah, we got 2 spots left in December. So the new guest list will be coming out on our website pretty soon here. So for all of you that want to check it out, Jessica.
Yeah.
Happy Halloween.
Happy Halloween.
Halloween, guys.
Happy Halloween, guys. Thank you, everybody. Have a wonderful day.
Stay safe.
You've been listening to Inside Real Estate, the nation's top real estate podcast. Don't forget to follow us at irepodcast.com and everywhere where podcasts are available.
Yeah.
The tough thing with that is that ringtone. I can't silence that because Skype.
It's all right. It'll be fine if we text her or whatever, like, hey, call in. Ding, ding. I mean, it's.
Yeah, if I know right when she's gonna call in, I can actually just mute it.
Yeah.
And then when I hear it,
Cool, though.
or when I see it pop up.
I mean, it's
Okay.
not that big of a deal. But I mean,
Okay,
it just
cool.
like